Good evening, investors, and thanks for tuning into the forecast. I'm Jake Ackerman. Mr. Jay Powell, thank you. Thank you for saying that we all knew that you were going to say that you were going to slow down your rate-raising campaign and that at some point, early 2023, you're probably going to pause, but you're going to be data dependent. We get that. Just thank you for acknowledging that for the investors who have been bullish this last quarter of the year, and we're trying to get on the other side of this inflation spiral. We've been seeing some inflation data. Now, didn't really acknowledge that they've really, they acknowledge that inflation is starting to come down, but they haven't acknowledged it in many places that we're seeing. And listen, rhetoric for inflation fight is extremely important. We have to realize that, and it's okay for them to have this hawkish tone because they don't want the stock market to take off and go back up to new highs yet. They need to keep the stock market and other markets down so monetary policy doesn't loosen. That's their objective. We want slower growth right now. That's okay, and then we can defeat inflation and get back onto our path of growth. Now, when I say defeat inflation, there's a whole lot of variables that go into it. We may not defeat inflation. We have a lot of geopolitical issues that still need to be resolved. Russia, Ukraine, China having this zero COVID policy. But we have actually seen China start to open up their economy because of these mass protests, because you do some research yourself, go look up what happened with this 10 people dying because of the COVID zero policy. Their medical fire department teams couldn't get in to save people, and they ended up dying, unfortunately. And now this caused a countrywide protest, which you don't see in the communist country of China. And we did see it, and it looks like they pivot a little bit, but you can't really trust how everything's going to play out. But we are seeing signs of them reopening, which is, it's good news and bad news. It's good news that we're going to be able to bring over some materials that we need. That could bring down inflation, but there's a contra where energy prices, crude oil prices specifically, have been coming down and coming down quickly since mid this year, and this is exactly what we needed to defeat inflation. Well, as China reopens, demand increases, supply is still pretty low. That's going to cause prices to go back up. Now, the Biden administration has made some strategic moves to increase production in Texas, and they've been going out other countries. Not really, you're not going to really see it highly highlighted from them, but we do see it in once we start looking where the energy is going to come from. Where is the supply going to come from? So they're starting to do things to bring up supply. So maybe that balance out. One thing that we do need to watch for next week is, on Sunday, OPEC is going to have their meeting of, hey, where are they going to increase production, decrease production, or maintain it where it is? There's talks that they're going to cut production as the Russian sanctions take place. So we'll have to, watch that, see what that does to energy prices. I'm sure it's going to have a short-term bump, but we'll see if other countries can respond by increasing the supply, and that could continue the downward trend now of crude oil prices and continue the upward trend of the stock market and continue the downward trend of inflation. But that will be we'll be seen after that takes place. You can't really predict that. Now, a couple other things that I wanted to point out is of this bullish thesis is we've slightly broken the downward technical trend. We are just above it, not a really clear break. So we'll just have to see what kind of follow through that we get next week. Do we get rejection and get a more significant pullback, or do we get follow through, which is possible, especially if the crude oil prices don't go too high. And then we did have a hotter than expected jobs number today that did cause the market to sell off this morning and completely rebound. And the reason for that is I think that the Fed unfortunately wants unemployment to go up, but inflation's coming down, and that's their main objective right now. And if we can keep bringing inflation down, unemployment may not necessarily go as high as they are anticipating it will. Second, one of my most important things that I've been watching is the bond market. The bond traders have been spot on through this whole cycle. They've been calling the downward trends before the stock market, and they've been calling the rallies. But we haven't seen them doing that this year, but they're starting to rally. The bond market is starting to rally. Rates are starting to come down. So let's see how it materializes. You know, the Saudi Arabia OPEC decision on Sunday is really the biggest event next week. You have PMI, that's more of the producers inflation index, which is still looks like it's going to be low. But then the following week, 13th, we get critical data, inflation data, and then followed by the Fed meeting on the 14th. So a lot of exciting things coming here in the next couple weeks. Stay tuned. Ackerman Financial Group, expertise you deserve, experience you can count on.